Inflation is a natural occurrence in any economy. Over time, prices for goods and services will go up as the cost of production increases. This can be a major challenge for people who are living on a fixed income. However, for those who know how to take advantage of inflation, it can be a major source of income. In this video, we'll discuss 5 ways that rich people make money from inflation. Welcome to Epic State, your home for money, mindset, and motivation. Number 1. Real estate. One effective way that rich people can make money off of inflation is with real estate. By intentionally selecting real estate that is likely to appreciate when inflation rates increase, savvy real estate investors can capitalize on rising values for maximum financial gain. During periods of high inflation in stable property markets, the value of property and rent goes up, as governments raise interest rates to tackle the inflation, which means many people may struggle to keep up with mortgage repayments and will have to sell their properties. So if you have the cash available to hand, then you can jump on property opportunities to rent or flip, giving you great returns on your investments. Number 2. Assets that increase in value. Wealthy people understand that certain assets increase in value or do better when times are tough. By buying up assets like stocks and commodities, real estate, and bonds before the inflation wave hits, they can make do with less money while still coming out ahead later. When people have to watch what they spend, the focus goes on paying the important bills first, like energy and heating. These commodities can increase in value, giving you higher returns during inflation. The same goes for government-backed bonds and gold, as investors shift to more stable investments. Markets normally follow similar investment patterns in times of crisis, so it's an ingenious way to use inflation to one's advantage. Number 3. Debt devaluation. With inflation waging war on our pocketbooks, it can often feel like there's no hope for us ordinary folk other than riding out the storm. But the rich see fluctuating rates as an opportunity. By taking advantage of this discrepancy between debt prices and prevailing interest rates, they can rake in huge returns while the rest of us struggle to get by. Debt devaluation is a unique way that rich people make money with inflation, almost like a kind of strategic game. Debt devaluation involves manipulating the debt cycle so that lenders are forced to adjust interest rates and loan conditions in their favor. It isn't an easy trick to pull off, but when done correctly, it can be a very lucrative move. As inflation rises, rich people theoretically benefit from this because their wealth increases as the cost of goods go up. Debt devaluation allows them to take advantage of the situation by locking in attractive rates for lending or borrowing, and generating additional income over the long term. In a nutshell, they play with debt to increase their wealth. Number 4. Owning businesses. Business owners in a number of sectors can leverage inflation as an excuse to increase profit margins. While the rest of us are moaning and groaning about our decreasing purchasing power, business owners see it as an opportunity to make more money long term. By increasing prices for goods, business owners can benefit from the steady rise in prices to drive up their profits, all thanks to inflation. Not only does this allow business owners to access big earnings, it also gives them more control over the prices of their products. Prices rarely come down after periods of inflation, even if their costs do. Rich people recognize and take advantage of the possibilities inflation offers their businesses, ensuring they make more money while using inflation as an excuse for charging more. Number 5. Tips or I-bonds. Tips or I-bonds really fit the bill when it comes to using inflation for a financial advantage. TIPS stands for Government-Issued Treasury Inflation Protection Securities, and I-bonds are Treasury Inflation Protected Savings Bonds. TIPS have an adjustable rate of return, with both principal and interest rising with increasing prices, while I-bonds offer a low-risk investment with a rate of return determined twice yearly by the US Department of Treasury. These investments can be an excellent way for wealthy individuals to protect their money from losing its value over time, as well as leveraging any potential increases in inflation rates. It may not be as glamorous as luxury cars or memberships in exclusive clubs, but these investments are guaranteed to keep wealthy wallets full while they watch their less fortunate friends grapple with the cost of everyday goods. That's it for today's video. Make sure to subscribe for more money, mindset, and motivation. Until next time.